Bitcoin up for 3 straight weeks as it trades now around $44,000, helping Robinhood have its second best week ever as a result. And it's not just crypto where fintech is flourishing. A firm clocking its best month ever in November after seeing record buy now, pay later sales on Thanksgiving weekend. My next guest sees those gains continuing into next year as well. Joining me now is Dolev, senior fintech analyst at Mizuho. Great to have you back. Welcome.
Thanks, Kelly.
So I guess we should start with, let me just start with the crypto stuff because that's kind of fascinating. It always feels like, if this is the game Robinhood wants to play, then you live by the sword, you die by the sword. But what is your latest thinking on sort of the success of that platform? How much is crypto? How much is sustainable? That kind of thing.
Yeah, thanks. It's a great question. I think crypto, they're a net share gainer in crypto, and the data that we saw, like in November, they've been gaining share from Coinbase. So that's a great thing. To get to the next level, which is what you're asking, I am super bulled up on the UK, Europe growth. So it's going to be more of the same, but in other regions, and now also in Asia. So that's kind of the next leg, taking all that stuff that you're seeing and putting it into other regions.
Why are you so much more optimistic about Robinhood than Coinbase? We've talked about your bearishness there for some time. What's the difference?
Yeah, I could not be more bearish on Coinbase. Nothing changed there. So if you think about it, let's just kind of play it out. If you think about the Bitcoin ETF, which everyone is excited about, right? Robinhood benefits from that because you could trade the ETF as an equity. For Coinbase, it's net cannibalization plus...
Because you don't need to trade on their platform
You don't need to trade it. So, even take the most astronomical number you can think of, right? Like $1 trillion in AUM. If they get like 2-3 basis points off of that, that's probably like 5-6% incremental growth. I'm talking like something crazy, like that's not going to happen. But that's very little incremental to Coinbase, and people don't see through that.
But what about the people, and again, institutionally, trading-wise, absolutely see the use for the Bitcoin ETF, but what about people who are like, look, it's pretty easy to hold my Bitcoin on crypto. I feel like I own that asset a little bit more securely. It's not just kind of a play on the underlying. Isn't that likely to kind of shore up demand, keep people on that platform?
Totally. There's going to be demand for that, but just think about the fee differential. So Robinhood is charging 34, 35 basis points. That's 1/3% to trade in and out of Bitcoin. Coinbase is charging 10x that number. At some point, and this is why I think we're seeing share gains at Robinhood, the market is going to start, or people are going to start understanding, hey, why am I overpaying for trading in and out? Makes no sense.
So then that's kind of the rivalry of those trading platforms playing out as we watch whatever happens with the price of crypto exactly. Elsewhere, fintech, we mentioned Affirm, some of the buy now, pay later stuff. You think that's solidly poised into next year still? Because so many people are raising questions about whether there's a shoe to drop in the BNPL space.
Yeah, and I have a breakthrough thought for you today, as always. Affirm is not a buy now, pay later company. That was the currency to sit at the table. It's a full-fledged financial services company. They issued a hybrid debit credit card. It went perpendicular. Literally, the number of users went from 0 to like 800,000-900,000 within weeks or months. 2024 is going to be the same, but more. And they're going to get into more services. It's the most innovative name in payments.
But I always think once these companies start to broaden out from what they were innovative at, then they're just competing with everybody else. And is that really a game that you have deep enough pockets and enough of, can you go up against the giants?
And it's incremental. So the way I see this, it's incremental because if you use Affirm and then you have the card, right? The card users use Affirm 3 times more than the non-card users. And then if people put like direct deposit, their checks, right? They use it even more. So you're getting like a multiplier effect. So more of the same with very little incremental investment. So 2024 is going to be the year of Affirm.
Driving you back to the core product. Interesting. Quick, I wanted to mention this to you because I've seen some chatter online about this. We had talked about the launch of FedNow, the instant payment service at banks, being a potential headwind for all of fintech. But as I understand it, the rollout is incredibly slow. Adoption is very low. Could you just provide a comment on that?
Yeah, as you expect, anything that the government does takes a long time. I've heard that there's several hundred banks that are already using that. So if you think about the impact of FedNow, look at places like, Norway. When there's 100% digital and there's a real-time payment rails, eventually it takes off. So it takes time, but then it takes off. So I wouldn't sort of write it off at this point.
Does that moderate your bullishness then on the space broadly speaking, or that's just some of the more exposed players that we've talked about previously?
I think it makes me more bullish on the names that can actually innovate, like the Affirms of the world, the Robinhood. It makes me less bullish on names like Visa, which are basically living off of interchange.